The global trade landscape shifted dramatically on April 2, 2025. President Donald Trump announced a new wave of tariffs on imports. These tariffs target a range of goods from various countries. The move sent shockwaves through the global economy. It also ignited a firestorm of debate. The tariffs are wide-ranging. They include a baseline 10% duty on all imports. Certain countries face even higher rates on specific products. This is a significant escalation of Trump's protectionist trade policies. These policies have been a hallmark of his presidency. The affected countries represent key players in the global market. China, Japan, Vietnam, South Korea, and Taiwan are all in the crosshairs. Even the European Union faces a hefty 20% tariff on its exports to the US. This sets the stage for potential retaliation and a full-blown trade war. These tariffs represent a gamble by the Trump administration. The administration aims to reduce the trade deficit and protect American jobs. However, the potential consequences are far-reaching. The global economy braces for impact. China finds itself bearing the brunt of these new tariffs. The Asian giant has long been in Trump's sights. The U.S. trade deficit with China is a major point of contention. The tariffs target a wide range of Chinese goods. These include electronics, machinery, and consumer products. Japan, a close U.S. ally, is also feeling the pressure. Japanese automakers are particularly vulnerable. The tariffs could significantly impact their exports to the U.S. This could strain the strong economic ties between the two nations. Vietnam, South Korea, and Taiwan are also caught in the crossfire. These Asian economies are major exporters of electronics and manufactured goods. The tariffs threaten to disrupt their supply chains and hurt their export-oriented growth models. The European Union, a major economic bloc, is not immune either. The 20% tariff on EU imports targets a broad range of products. This escalates trade tensions between the US and its European allies. The tariffs have created a sense of uncertainty and anxiety among the targeted nations. Governments are now scrambling to assess the damage and formulate a response. Retaliatory measures are likely. The announcement of new tariffs has ignited a fierce debate. Supporters and critics have wasted no time in voicing their opinions. The arguments on both sides are passionate and multifaceted. Supporters of the tariffs, including many blue-collar workers and manufacturers, see them as a necessary step. They argue that these measures will protect American jobs and industries from unfair foreign competition. They believe that for too long, the U.S. has been taken advantage of in trade deals. Critics, however, argue that the tariffs are a blunt instrument. They claim these tariffs will ultimately harm the U.S. economy. They point to the potential for higher prices for consumers, job losses in sectors reliant on imports, and retaliatory tariffs from other countries. Economists are divided. Some see the tariffs as a risky gamble with potentially disastrous consequences for the global economy. Others believe that they could be a negotiating tactic to force better trade deals for the U.S. The debate is likely to rage on as the tariffs take effect and their impact begins to be felt. One thing is clear, the stakes are high for everyone involved. The specter of a global trade war now looms large. The interconnectedness of the global economy means that a trade war between the U.S. and its trading partners could have far-reaching consequences. The ripple effects could be felt across the globe. A trade war is a scenario where countries engage in a tit-for-tat exchange of protectionist measures. This includes tariffs, quotas, and other barriers to trade. Such a conflict would disrupt global supply chains, increase costs for businesses and consumers, and could potentially lead to a global recession. The risk of a trade war is heightened by the fact that many of the countries targeted by the U.S. tariffs are economic powerhouses in their own right. China, in particular, has shown a willingness to respond to U.S. tariffs with retaliatory measures of its own. The potential for escalation is real. If cooler heads do not prevail, the world could be headed for a trade war that would benefit no one. Section 5. Market jitters. The stock market responds. The stock market, a barometer of investor confidence, wasted no time in reacting to the news of the tariffs. Major indices around the world experienced sharp declines in the days following the announcement. The Dow Jones Industrial Average, the S&P 500, and the Nasdaq all took a hit. The market jitters reflect the uncertainty and anxiety that the tariffs have injected into the global economy. Investors are concerned about the potential impact on corporate profits, economic growth, and the stability of the global trading system. Companies with significant exposure to international trade, especially those operating in sectors targeted by the tariffs, have been among the hardest hit. Their stock prices have tumbled as investors reassess their growth prospects in a world of heightened trade tensions. The stock market's negative reaction serves as a stark reminder of the potential economic fallout from a trade war. It remains to be seen whether the market will stabilize or if further declines are in store. Section 6. Economic alarm bells, inflation and growth concerns. Economists are sounding the alarm. The tariffs, they warn, could have significant and long-lasting negative consequences for the global economy. Two major concerns stand out: inflation and slower economic growth. Tariffs are essentially a tax on imports. When tariffs are imposed, the cost of imported goods rises. This increase in costs is often passed on to consumers in the form of higher prices. This can lead to inflation, which erodes purchasing power and slows economic growth. Moreover, tariffs can disrupt global supply chains, making it more expensive and difficult for businesses to obtain the raw materials and components they need to produce goods and services. This disruption can lead to higher prices, reduced output, and slower economic growth. The International Monetary Fund, or IMF, has warned that the tariffs could shave off a significant percentage of global GDP growth. The organization has urged countries to resolve their trade differences through dialogue and cooperation. Section 7. The business world reacts, a mixed bag of opinions. The business world has greeted the news of the tariffs with a mix of apprehension and, in some cases, cautious optimism. The reaction largely depends on the specific industry and a company's exposure to international trade. Some domestic industries that have long faced stiff competition from imports welcome the tariffs. They see the tariffs as a much-needed lifeline. They hope the tariffs will level the playing field and allow them to compete more effectively. However, many businesses, particularly those heavily reliant on global supply chains or those that export a significant portion of their products, are deeply concerned. They fear that the tariffs will squeeze their profit margins, make them less competitive, and potentially lead to job losses. The uncertainty surrounding the trade situation is causing businesses to delay investment decisions. This wait-and-see approach could further dampen economic activity. Section 8. Trump's rationale, protectionism, and American interests. President Trump has vigorously defended his decision to impose tariffs. He argues that they are essential to protect American jobs and industries, reduce the trade deficit, and ensure that the U.S. is treated fairly in trade deals. Trump's approach to trade is rooted in economic nationalism. He believes that the U.S. has been taken advantage of in trade deals for too long, resulting in the loss of manufacturing jobs and a decline in American industrial might. His supporters argue that he is a tough negotiator who is not afraid to stand up for American interests, even if it means risking a trade war. They believe that his aggressive stance will ultimately lead to better trade deals for the U.S. Critics, however, argue that Trump's approach is misguided and counterproductive. They contend that tariffs will harm the U.S. economy, alienate allies, and undermine the rules-based global trading system that has benefited the U.S. for decades. Section 9. The road ahead. Global trade at a crossroads. The world now stands at a crossroads. The future of global trade hangs in the balance. The outcome of this trade dispute will have far-reaching consequences for the global economy, businesses, and consumers worldwide. If the trade war escalates, it could lead to a prolonged period of economic uncertainty, slower growth, and higher prices for consumers. The fabric of the global trading system, painstakingly built over decades, could be irreparably damaged. However, there is still hope. Dialogue and diplomacy can still prevail. International organizations, such as the World Trade Organization or WTO, can play a vital role in mediating disputes and finding common ground. The key lies in cooperation. Countries must resist the temptation to retreat into protectionism. They must work together to strengthen the rules-based trading system that has underpinned global prosperity for decades. The stakes are simply too high to fail.